Today's highlights: honest folks dumping, their sons cashing in, institutions bottom fishing, retail investors fleeing for their lives, Bitcoin has become the smart money's bargain bin, USD is shedding value, Binance is down, so is this a shakeout or a crash? Monday, October 13th, BitcoinTV Chinese channel. Where is the credibility? I'm Dong Dong. First, let's look at the top crypto news from the past 24 hours. On October 11th, Bitcoin plunged straight from $102,000 to the floor, then bounced back to $115,000 with over 20 billion liquidated across the network. Altcoins and privacy coins were completely wiped out in the process, a total annihilation package. The trigger, of course, was our old acquaintance Trump, who first loudly called for a 100% tariff on China and the next second threw out the taco. Trump always changes his tune, leaving the market bewildered, and safe haven trades exploded like fireworks. So, the market quickly rebounded, and Bitcoin almost touched the CME closing panic line, but the wounds remain. Next, it all depends on whether China will retaliate. If there's no response, then this tariff scare will turn out to be a false alarm. After all, in Trump's playbook, there's never a conclusion, just another plot twist in the next episode, with even more drama to come. While Trump's words can give the market a cold shower, his younger son is busy counting money in the crypto world. According to a Forbes report, Baron Trump, who is only 19, has already secured a 10% stake in the family's crypto company, World Liberty Financial, with a valuation as high as $150 million. This young crypto heir is still attending a private school in Maryland. Annual tuition is $50,000, paid without batting an eye. Rumors of making $1 billion by shorting with a midnight yacht? No solid evidence. This Trump father and son, one with a sharp tongue, the other with natural charisma. Even their wealth has a political flavor. This recent drop is truly surreal. Bitcoin plunged from $123,000 to $110,000. But institutions immediately bought the dip, sending the Coinbase premium soaring to 0.182, the highest in 19 months. The meaning is straightforward. Institutions are buying up chips you throw away in panic. Even more intense is what's happening with Ethereum. The premium shot straight up to 6.0, setting a new record for 2025. While others are forced to sell, they're increasing positions. While others are fleeing, they're lying in wait. Smart money isn't afraid of a drop. They're only afraid of missing out. Now that both Bitcoin and Ethereum premiums are rising, it shows institutions have already set up camp at the lows. You think it's a crash, but for them, it's a special discount sale. By the time retail investors calm down, the bottom has already been firmly locked in by capital. The market is shifting from being driven by sentiment to being dominated by institutions. The bull market hasn't started yet, but smart money has already secured first-class seats. Looking at the on-chain data, this so-called crash is actually more like a dusting off. On October 10th and 11th, the price of Bitcoin dropped from $122,000 to $102,000, but only 2,688 and 3,502 Bitcoins flowed onto the chain on those days. It really doesn't look like a genuine sell-off. In other words, the major players haven't left at all. They're still quietly accumulating. So who was selling? Leveraged traders getting liquidated in derivatives, one round after another, with the system automatically closing positions. The market moved like dominoes. Then, with just one Trump comment about new tariffs, the market saw it as a black swan. Panic accelerated. People rushed to close out. But what was the result? Real Bitcoins weren't sold. Only leveraged positions wiped out. Sentiment hasn't collapsed. Funds are stepping in to buy at lower levels. This isn't a crash, it's a clearing out. Not big players running away, it's smart money cleaning up the battlefield. Please like and follow. According to the latest 24-hour updates from the crypto, blockchain, and mining communities, this morning we released our weekly members-only market review. Click the little bell to join the channel and become a member and receive your members-only wealth code from Monday to Friday. Trump's comment about new tariffs once again ignited the fuse for global risk assets, causing volatility across stocks, gold, and cryptocurrencies. Bitcoin briefly fell below the $120,000 mark, and altcoins were hit even harder, with losses everywhere. According to data from CoinGlass, the total amount of liquidations across the entire network in the past 24 hours reached as high as $19 billion. This was also the largest single-day liquidation wave in the past 3 months. Some DeFi protocols briefly lost their peg due to excessive liquidations, and stablecoin funds also flowed back to exchanges on a large scale. But just as the market was still reeling, Thunderstat founder and Bad Meat chairman Tom Lee stepped up to express a bullish view on Ethereum. In his opinion, this correction looks more like a shakeout designed to test the market. Removing leveraged bubbles clears the way for future price increases.
BitMine holds 2.83 million Ethereum, valued at $10.5 billion. Despite an unrealized loss of over $2 billion, the signal of institutional bottom fishing outweighs the price. Since early October, market data shows net inflow to mainstream Ethereum staking platforms increased by 17%, and active on-chain addresses returned to September levels,
which was somewhat expected. We've seen a nice rise of 36% since the lows in April, and I believe today's drop is the biggest in over 6 months. But it's good to see the VIX spike. At one point today, the VIX spiked by 29%. That's the 51st largest spike ever in the VIX. So we're seeing a top 1% move, which I'd say reflects the market seeking safety.
According to this data, BitMine increased its holdings by 128,718 ETH during the crash, spending $480 million. Tom Lee stated that the correction was long overdue, the trend remains unchanged, and there is still room for a rebound after the bottom.
At the same time, Taiwanese musician and crypto investor Jeffrey Huang also spoke out online, saying that the crash is not the end of the world, it's a confidence lie detector. Hearing this talk in a blood-red market stings a bit, but you admit he's got guts. After losing money, he's still increasing his position, bleeding while shouting, "Brothers, buy the dip." Analysts, however, are much calmer. Liquidity is still tight. It's uncertain if the Fed will cut rates, and whether funds flow back before the ETF is also up in the air. For sentiment to warm up again, we still need supportive policy wins. But then again, every major crypto crash feels like an emotional purge. First conviction dies, then a beat mind is reborn. This time, someone threw in $480 million to buy the dip. It's not just a financial move, it's more like giving the market a shot of adrenaline. A bull market is never simply the result of rising prices. It's forced out of brutal crashes. When everyone else panics and runs for the exits, those who dare to catch the falling knife often end up laughing last in the next cycle. Trump, he's tweeted again, and this time it's not just talk, it's a financial nuke. With one new tariff, he completely overturned global risk assets. US stocks plunged, gold fluctuated, and the crypto world saw lock-ins. Binance's trading volume skyrocketed, causing system lags, delays, and outages. The official statement says no money was lost, but trust had already left. The market isn't afraid of falling prices. It's afraid Trump is the unexpected variable. A single tweet from him can change the game. One political statement is more lethal than technical indicator. How are crypto joking? When Trump speaks, Wall Street takes an ice-cold shower, while the crypto world is in a sauna.
According to Binance Futures contract data, during this drop, the USDT margined insurance fund balances for Bitcoin, Ethereum, and BNB contracts fell from $1.23 billion to $1.04 billion. Many altcoins saw their prices plummet. Atom dropped as low as $0.001. IOTX briefly went to zero, and the stablecoin USD also depegged to $0.6567. Binance co-founder He subsequently posted 2 messages apologizing to the community.
If Trump's tweet was the fuse, then risk control on that side was the detonator. USDE, BNB, Solana, and WDETH all successively lost their pegs, not because the market was too wild, but because the mechanisms were too rigid. The price index wasn't updated, and the collateral model was rigid. Once volatility increased, the market turned into a domino effect. Chain liquidations spread like a virus, and it's a familiar pattern from derivatives to Bitcoin. What's even more embarrassing is that this isn't the first time. It's just the same old story from Luna, only with a different name. What was exposed this time isn't just a risk control loophole, but the entire industry's logic of fake stability and real leverage. Some people can only smile wryly. This isn't a market crash, it's a structural collapse. It's not market punishment, but a system error. What's leaking is the industry's fate of fake stability and real leverage. In the crypto world, people even joke that it's not the coins crashing, it's risk making up for lost lessons. In the era of global surveillance, Pavel Durov warns that the internet isn't dead, but freedom has died first. With the US and China going crazy over AI, is Trump's drastic move aimed at the enemy, or is he cutting down his own miners? The world is switching to surveillance mode. Microsoft helps the Israeli military monitor Palestinians. The EU has another chat control bill under fighting terrorism and child exploitation, but it's about snooping on your private chats. The UK is even more outrageous. Starting in 2025, you'll scan your official face just to access online services. Privacy? Consider it transparent. At this moment, Telegram founder Pavel Durov had his birthday and posted a warning: the free internet is ending. That line felt like lighting a candle for the digital age, and the internet exploded. We thought the internet was a highway for free thought, but now realize it's just a speed-limited surveillance zone. What they call security is just sophisticated censorship, and so-called protection is nothing more than that. Just a different form of surveillance. The internet isn't dead, it's just that freedom has been pixelated.
Is the difference between a society with freedom and a society without freedom. Pretty early in life, I was 4 years old, when my family moved from the Soviet Union to northern Italy, and I could see that a society without freedom cannot enjoy the abundance of opinions, of ideas, of goods and services.
Durov warns that contemporary society is losing its last chance to save a free internet. The internet, which once symbolized open information and the exchange of ideas, is now gradually being transformed into a tool for global surveillance and control. He points out that Germany suppresses online dissenters, the UK imprisons citizens for social media posts, and France has launched criminal investigations against tech leaders who defend privacy. All these policies, carried out in the name of security, are eroding fundamental rights. He warns that a dark, dystopian digital world is approaching, and that digital freedom may soon become a thing of the past.
Pavel Durov has always been at odds with surveillance by nature. In 2014, when the Kremlin ordered him to block political posts on VK, he flatly refused and was forced into exile abroad. 10 years later, his Telegram app has become a global sensation, and on his birthday, he dropped a digital bombshell. The free internet is being strangled. This time, he is not shouting alone. Elon Musk reposted in support, echoing Edward Snowden's outcry and condemning this as blatant suppression of free speech. Vitalik Buterin, the founder of Ethereum, went further by directly calling out the EU's proposal, saying, "Don't use security as an excuse for surveillance. The boundaries of technological power are becoming blurred, algorithms are starting to serve political interests, and privacy has become a luxury of our era. When every security system is watching you, the internet may still be running, but freedom has already started to go offline." That blow in April really hurt the enemy 1,000, but wounded ourselves 800. President Trump's reciprocal trade tariffs originally intended to bring manufacturing back home, but in the end, it was miners' money that got drained first. As soon as the policy was implemented, a 25% tariff was slapped on all chip and power module imports from China, Malaysia, and Vietnam. The cost of mining machines started rising even faster than Bitcoin itself. Miners' profits were slashed in half. Bitcoin dropped 9% in just 2 weeks. Mining stocks plunged across the board, and CleanSpark was hit with a $185 million back tax bill from customs. It also left you with $100 million in single mine rights, making people exclaim that this isn't mining anymore. This is digging a hole. What's even more outrageous is that BitMine and Canaan Technology were forced to delay shipments, and American mining machines are generally taking 6 to 8 weeks to deliver. Miners haven't even recovered from the tariff shock, and the second blow, chip restrictions, is already looming overhead. Originally, people thought this was just a manufacturing policy. In the end, it saved the competitors but hurt our own miners.
Recently, the U.S. Senate passed the GAME Act as an amendment to the National Defense Authorization Act, NDAA, with its core focus on the chip supply chain. The act requires AI and high-performance computing, HPC chip manufacturers like NVIDIA and AMD, to prioritize fulfilling domestic U.S. orders, and to provide proof that domestic supply is sufficient. Only then can they apply for overseas export licenses. At the same time, strict technical thresholds are set. Any high-end chips whose total processing performance density, or DRAM bandwidth reach certain standards must undergo step-by-step approval. Top-tier products may even be banned from sale. Currently, the bill still requires approval from the House of Representatives and must be signed by the President before it can officially take effect.
However, if you don't sell them anything, then as you said, that will only accelerate their desire to become independent from the American stack. So I do think there's a strong case for selling to them. Let's call it a deprecated American chip, or rather a less advanced American chip.
This move was meant to build a moat, but they ended up digging a hole under their own feet. The intention was to protect AI dominance, but they ended up cutting off their own mining industry. Nominally, it's called the AI Safety Act, but in reality, it looks like a computing power blockade order. AI training, crypto mining, and high-frequency trading are all affected. NVIDIA's H100 and AMD's MI300 are on the approval list, causing mining machine costs to skyrocket and delivery times to be delayed. Miners exclaim computing power is now more expensive than gold. What's more outrageous is that, with tariffs, American chips have become absurdly expensive, while overseas they're as cheap as cabbage. As a result, places like the Middle East, Kazakhstan, and Canada are frantically stockpiling chips and mining rigs, while American miners can only look on in frustration. The data is clear. The US share of computing power may drop from 38% to below 30%. The top spot in mining power is about to be lost. What's even more ironic is that just after the honest government called for making the US the global crypto center, this new bill immediately put everything into self-lock mode. The plan was to protect AI, but in the end, not only did AI not get protected, even the mining industry is gone.
The community has everything except a prediction market. He laughed and replied, "Why don't you do it? What's Their Labs is putting up the money, which is both right and generous. It's basically a clear signal that Binance wants not just DeFi, but a new story." Meanwhile, British media revealed that 19-year-old Baron Trump is expected to parachute in as a senior executive at TikTok. Netizens joke that while Trump Sr. plays with Twitter, his son is taking over TikTok. This family really seems set on dominating all of social media. Chen Qingqi, vice president of Circle Asia Pacific, said that professional investors in Hong Kong can use USDC with confidence, as regulations will not be tightened further. For now, there's no hope for a Hong Kong dollar stablecoin. The main focus remains on the US dollar USDC and the Euro ERC. In short, the early flow of Hong Kong dollars has paused, and even hackers can't escape. On October 2nd, Bago spent $38 million to buy Ethereum. 10 days later, there was a flash crash and Huangge lost $5.37 million. Now he's truly become the most tragic reverse expert in the crypto world. BNB has made a comeback with the price surging to $1,300 and its market cap breaking through $180 billion in one go. It directly overtook USDT to claim the throne as the world's third largest, pushing other stablecoins aside. BNB is truly showing both stability and ferocity this round.
Today in the hall, if you meet someone and then discover there are a lot of rumors and gossip about them, don't be quick to follow the crowd. And you definitely shouldn't just go with the flow. If you take a bit more time, you'll realize that the person being talked about, whether in terms of character, vision, knowledge, or perspective, is far superior to those gossiping about them. When someone is slandered or ostracized, it's often not because they're bad, but because narrow-minded people are jealous of them, yet can't bring them down. So they use rumors to cover up their own insecurity. If someone slanders you, you should actually be happy. Wise people always see the world in the opposite way. Jealousy is a form of admiration, and slander is a kind of envy. Ironically, those who try to smear you are often who most want to be you. But since they lack ability and vision, all they can do is try to get comfort by making you feel bad. When you broaden your perspective and expand your horizons, you'll realize those voices aren't worth mentioning. If your heart is steadfast, the noise will fade away. With the sky above and sea below, countless flowers bloom. Only you know your own heart. If you understand, please like. That's all for today's program. Our channel focuses on valuable news in crypto, blockchain, and mining communities. Here you'll find news updates and in-depth reports. If you find our channel valuable, share and follow us. You can also become a member and receive our exclusive wealth codes Monday to Friday. Let's work together to add another zero to our assets in the next bull market. See you tomorrow.